we detected an unusual trade worth $2.7 million on Lumen Technologies stock, ticker symbol LUMN. And so in this video, we'll analyze this unusual option activity to find out if this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting the stock to move lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was unusual option activity on November 4th at 12:59 p.m. at the 42-second mark in these April 17 options at the 11 strike calls. But notice we have more contracts over here as well at the exact same time in the exact same options, the April 17s at the 11 strike calls. And we have hundreds of contracts here, and then we have 5,200 contracts here. We also have the same price, $315 for each of these call options. And so we can calculate the cost of this trade. We have 5,200 contracts plus 863 plus 863 plus 862 plus 862. And so we have a total of 8,650 contracts. And so we multiply by the price paid for each of these contracts, $315. We move the decimal 2 places to the right since these are option prices. And so we have a total trade cost of $2.7 million. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, the smaller, more selective trades that we share on our website have a lower risk and a higher probability of profit. And so if you want to get access to those lower risk trades, we'll put a link to our website up here so that you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade is higher risk, we still took it because it was still an unusual trade being opened. Now, how did we know these were new opening trades? Well, if we take a look at the historical data on the day this trade was made, November 4th, we can see here that for these April 17 options, at the 11 strike calls, there was only 1,887 open contracts. And so if they opened new trades here, then the open interest should now have increased. So let's confirm this data. We can see here for the April 17 options, at the 11 strike calls, the open interest has now jumped to over 11,000 open contracts. So indeed, these open interests have increased, adding to the previously open contracts. So we know these are new opening trades. And that is why we also entered the same position here. POS stands for our position with the green color indicating a buy position. Because based on our analysis, this investor bought these 11 strike calls for $315 each, as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on Lumen Technologies stock. And so we can confirm that by checking the options Greeks. This trade has a positive delta which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Because of this, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $11, the stock needs to move above $14.15 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments, do you think Lumen Technologies stock will move higher or do you think it will drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.